We're now just half an hour away from the open in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne. Our top stories this morning. Traders keeping an eye on policy signals from central banks. Dovish comments from the Fed and ECB pushing Asian stocks higher while the yen strengthens on Bank of Japan rate hike bets. Chinese regulators said to be scrutinizing smaller banks' bond investments after a recent rally pushed sovereign yields near a record low. Plus, we have an exclusive conversation with JPMorgan Asset Management's China CEO Desiree Wang on the outlook for business on the mainland. A quick look at the price action here on this Friday morning. It looks to be a risk-on session here in the Asia Pacific. We're up about 0.6% for Asian stocks. It really was what we heard from Jay Powell, saying that they're not far from the confidence needed to cut those rates. You add that to an ECB signaling possibly rate cuts could be coming in June. That certainly is lifting the market here. Stocks as well as bonds were bid up overnight, and we're seeing a U.S. 10-year yield getting ever so closer to that 4% as well. Also, we're seeing when it comes to stocks hitting records in the U.S. again. So will that U.S. jobs report roil this party? That's the key question here. We did see that blowout payrolls report in January, so certainly there might be some room for some upside surprise here. 200,000 is what the estimate is going for here today. The Nasdaq Golden Dragon, we've been seeing some downside overnight here, and we have seen the CSI 300, the biggest two-day loss in more than a month. You take a look at how A50 futures are panning out, though. We're still seeing some positivity when it across futures of 0.4% to the upside. CGBs continue their rally, right? We're at 228 for your Chinese 10-year yield. We talked about that Bloomberg scoop of regulators looking very closely now at these bond investments in some of these regional banks with a concern that they might be speculating on these securities more so than actually lending out to boost the economy. We're still dealing with a slightly stronger renminbi, 719.90 here, just given what we've been seeing with the Fed and the dollar as well. But JGBs, Japan yen, they're certainly still in focus, the outperformer among the G10. We talked about those wage growth. We saw the best day since late December for the yen in particular. So that's really what your agenda is paying out to be here today. We talked about the bond market scrutiny. HSI, we're hitting around that 50-day moving average as well. Watching some of these U.S.-China ties in this part of the show here as well as we count down that State of the Union speech from President Biden. And also we're watching these liquidation sort of hearings playing out for the likes of Wang as well as Kaisa here this morning. ZTE earnings are on tap and just dropping here. Hong Kong government publishing that Article 23 draft as it fast tracks this new security law. All right, let's talk more about our top story and our big guest here this morning. It's been a year since JPMorgan rebranded its asset management business in the mainland after buying out its joint venture partner. It's also listing a new ETF next week, tracking the CSI A50 index. Joining us exclusively now to discuss all this and more is Desiree Wang, JPMorgan Asset Management's China CEO. Desiree, it's great to have you here in Hong Kong.
Thank you.
Obviously, we've been talking about this market, 3 years of equity declines. You've seen confidence among consumers, foreign investors have seemed, cratered, to say the least. But then you've seen measures from the government and policymakers to put a floor across markets, across this economy, and this week, what people are calling an ambitious 5% growth target. What's business been like from your end?
It has been a very busy 12 months for us. And you just mentioned that 1 year ago we acquired the full control of our business on the ground, and we did a lot of things afterwards. We rebranded the business to JPMorgan Asset Management China, and then we moved about our 400 China staff into our Shanghai office in Shanghai Tower. And currently, we are managing over 90 mutual funds on behalf of 64 million our Chinese clients, both retail and institutional, and we are helping them invest both domestically and internationally.
What is your approach in investing in China right now? Obviously, there's the long-term headwinds, but how do you square that with depressed valuations and pockets of opportunities?
I think the benefits of our business is we are managing a diversified business. So across different client channels, across different asset classes. So you probably look at equity, but we also have fixed income. We have active. We also have a passive, like you just mentioned, the ETF. So we are approaching the different market, different asset classes in different way.
And what strategies are doing well? We take a look at your funds with whether it's fixed income, equities, mutual funds,
Yeah.
are the high dividend yield plays, is that still going to be the winning strategies in 2024?
Yeah, I think high dividend and clients asking for income definitely will still continue to play. And I think it's just a new rising trend at this moment. And very interestingly is, if you look at the risk appetite, I think when you started, you talk about risk appetite. If you think about the 2 years of equity market declining, definitely the risk appetite will be relatively low. And we see if you look at the mutual fund industry, the active equity fund AUM actually dropped from at the peak, which is the end of 2021, represents about 24% of the whole industry AUM. And now it's about 14% of the whole AUM. And however, we are seeing the AUM for other asset classes like money market funds, fixed income, both active and passive equity, including ETF you just mentioned. Actually, the AUM is rising. So we are seeing the whole mutual fund industry AUM actually is still growing year on year. And can you believe it? In 2023, the AUM for the whole mutual fund industry actually grew 6%.
Wow, okay.
Yeah.
What's still needed then for China to really regain that heft in global portfolios? What are conversations with clients like now?
Oh, I think clients, we have different type of clients, so different type of conversations. And interestingly is when the market slows down, people start to think. So we see a lot of clients, they are using, over the past years, they are trying to reflect on how we should invest better, how we should sell our products better, etc. So actually, it's a great timing for us, JPMorgan, because a lot of clients are currently start to look at overseas investments, overseas experience for a potential answer, area for diversification, or area for potential improvement.
Yeah, that brings me to QDII, which is one of the only sort of channels for onshore asset managers to really provide products with foreign exposure. And it's really been in the spotlight these days because you have seen a surge in demand when it comes to, ETF premiums have surged. You see demand for offshore products as well. What are you seeing from your end in terms of demand right now?
It's not surprising to us because we see all the investors, all the money are always trying to chase a better alpha and better beta opportunities. That's the nature of investments. And we do, as you mentioned, we do see rising demand for offshore investment. And if you look at the interest rate differential between China and the US, and Bloomberg keep reporting every day, like Japan equity all-time high, US equity all-time high, definitely. And I think it's a good thing for clients to consider the diversification in their portfolio. Because actually I keep talking to our clients that the Chinese households' portfolio have too little percentage in offshore investments, too much strong home equity buyers. So actually, this is good for their the health of their overall portfolio.
For regulators, I'm guessing that might raise some alarm bells about capital outflows. Are you hearing any sense or any signs of slowing quotas when it comes to QD or QDLP?
Not really. I think the process has always been on track, and we've been speaking to them on a constant basis. And regulators here, I think they are trying to make sure the two-way flow are both open and available to investors. For example, we talk about the outbound QD flow, but if you look at the other side of the flow story, like the inbound, if you look at the northbound for the Stock Connect, that's an index people keep tracking, looking at the inbound flow. And ever since the China equity market bottomed up on February 5th, we've seen the inbound from the northbound flow for February, the single 1 month, is about, I think, 60 billion renminbi, exceeding the whole number for the whole year, 2022, 44 billion renminbi. So basically, we think that as long as the market is doing well, the flow naturally follow where they want to go.
I want to talk a little more about just regulatory environment right now. I mean, you do have a QD ETF that tracks the S&P 500. You've been trying to get approval of since late September. I believe it's still pending. Are you worried that regulators are scrutinizing some of these products now?
No, they have a different pace for approving different products. We also have this last November, the Hong Kong low-vol high dividend ETF being launched, which is also attracting the money to investing doing the low-vol and high dividend, which you talk about, the income thing play to that. And that IPO went pretty well.
Okay, let's talk about another IPO, which is your ETF that you just launched recently, the A50 ETF. Yeah. You are the first 100% foreign-owned fund house that is issuing this onshore.
Yeah, we are the only 100% foreign-owned fund house doing the local ETF business as well.
Yeah, how has it been so far?
That's good.
In terms of fundraising?
It's good. We haven't, as you mentioned, the ETF will be listed next Tuesday. Yeah. So we are busily prepared for that.
I mean, growing an ETF business in China, I'm guessing, is not easy. You have a lot of fierce competition from local ETF issuers. Yeah. You have also volatility in this market that could impact ETF performance as well. What is your strategy to gather more assets in the mainland?
I think you have to work harder and smarter. For example, one thing we are reflecting on how we can do things better is we attach a lot of importance to investor education. So basically, for example, for this single IPO, we did more than hundreds of offline training briefings to our clients to make sure that they know what they are buying and they understand the index that they are buying.
Yeah. In terms of fees, I mean, is that something that you think are competitive enough right now? You know, I think we've heard from other analysts saying that there might be some sort of fundraising war just given so much interest into ETFs among investors now. Do you foresee something like that?
What do you mean? The fee, the management fee for the...
Or fundraising wars, or at least fees being, you know, a race to the bottom in some ways.
That's actually what had been level play for us. Okay. Because we never do that like the local stuff. What we do is we do the trainings, we talk to brokers, we have a solid relationship and full bloom kind of a partnership with our brokers. But we don't. I'm not sure the fee you're talking about, but if that's talk about like brokerage commission, those type of thing, and we never do that. And the good thing is the regulator is eliminating that at the moment, so it helps level play the whole industry does.
And who are you going to be targeting? Is it more retail audience, domestic, or institutional investors?
You mean for that specific product or broadly?
ETF.
For ETF. We're going to start with domestic clients. Okay. And for example, the specific ETF we're talking about, the CSI A50, so that index and ETF could be listed offshore through the ETF Connect. So it would be available for global investors at the next stage. But for the first stage, we target the domestic investors. Could be retail for the IPO, and the institutional money will coming afterwards.
Okay. You mentioned a bit about the business overall, that there's no plans from JPMorgan Asset Management to really materially expand the business or even downsize right now. Is that still the strategy when it comes to talent and hiring? I think we try to materially expand our business if we can make the growth story really work well. And we do focus a lot on growing the business, making sure that we have the right products for our clients. And I think we're on the right track. What sort of new products could be in the pipeline? Is it mutual funds? Is it ETFs that you're looking at?
Yeah,
right
both.
Both?
Yeah. As I mentioned, that we are running a diversified business. Yeah. So we're doing both mutual funds and ETFs, and both equity and fixed income, active and passive.
In terms of hiring, I mean, obviously there's been reports about local banks, brokerages that have had to been faced with a bit of austerity, with China cracking down on some of these they call hedonistic bankers, and so compensations have been cut. This is an economy where there's little to no inflation right now. Right. What are you seeing in terms of your wages and bonuses? Do you feel the pressure to follow suit?
No, not really. We are quite committed and allowed to offer our locally competitive package to our people. And we do think that as I mentioned, business, actually probably for our whole financial industry, people is our most important asset. Okay. So we are committed to be competitive on this, and we are committed to keep hiring the top talents in the market. And we're still doing that.
So you're going to be hiring this year, headcount-wise?
Yes.
Yeah? Better than last year?
Depends, because we continuously review our business and evaluate where is a need for talents, and we can...
Where is the need right now, do you think?
We are focusing more on investment and research and some parts of the distribution.
Great.
Yeah.
Desiree, thank you so much. It was a pleasure. Thank you so much. Desiree Wang there, China CEO at JPMorgan Asset Management, joining us exclusively here in Hong Kong. Well, still ahead, President Biden is set to deliver his State of the Union address. We look at how China is likely to factor into this year's speech. But first, why China's biggest energy producer thinks the country's oil demand is set for a low growth phase, I should say. This is the China Show. Good morning. All right, some breaking news crossing your Bloomberg here right now. So we're talking a little bit more about Huawei and this chip breakthrough. And what we're hearing a little bit more now from our sources, that the company did use tech from 2 U.S. gear suppliers. So those include Applied Materials and Lam Research to manufacture an advanced 7-nanometer chip for Huawei back in 2023. So in some ways, this does signal that Huawei did rely on U.S. technology to produce this advanced chip in China last year, which raises a lot of eyebrows on what the Biden administration is going to do, just given these chip curbs and Huawei able to skirt around them, according to this reporting. So it does suggest that China still cannot entirely replace certain foreign components and equipment required for cutting-edge products like chips in particular. So this, of course, as we hear, a big theme in the MPC of self-sufficiency and new productive forces. Let's bring in our chief geoeconomics analyst from Bloomberg Economics, Jennifer Welch, joining us now. Jennifer, I mean, obviously, this news about Huawei, and really it's relying still on some U.S. tech, as our reporting shows, is one story of just growing sort of tensions between the U.S. and China when it comes to technological advancements. You were listening to some of the commentary from Wang yesterday in that presser as well. What's the sort of state of play right now between the two nations, you think?
Well, I think the news is breaking at a really interesting time right before President Biden is about to deliver the State of the Union address, which largely focuses on domestic policy, but I wouldn't be surprised if there's a strong China angle to it. And in particular, a lot of emphasis on the steps the Biden administration has taken to try and limit China's access to technology exactly like this for making chips. You know, it's interesting, Commerce Secretary Raimondo was actually in China around the time that Huawei launched this phone, and at the time said Commerce was going to investigate how they made the chip that underlies this technology, because it seemed to be more advanced than what the United States thought China would be able to accomplish based on the restrictions that were already in place. We're still waiting for the results of that investigation, but I suspect this news is going to put more pressure on Commerce to speed that up and release the results.
And we did a story just about, you know, the U.S. reaching out to its allies to try to at least broaden that fence a little bit. There has been some pushback from some countries as well. I mean, how do you see the allies participating in this? Does it need more of a multilateral sort of effort to curb China's technological advance?
I mean, really, the multilateral aspect to it is critical to these export controls functioning, in large part because the latest version of the restrictions, the updated restrictions that came out in October that built on the ones released the prior year, are really seeking to expand the scope of what's covered by the United States export controls, expanding it to additional equipment, expanding it to additional countries that the United States worries could be sort of transshipment hubs for this equipment to eventually flow to China. But ultimately, this is a very challenging sort of enforcement issue for the Biden administration and for any partners that are involved in it to face. You know, countries like China have immense resources to dedicate to priorities, which Beijing has made clear, you know, advanced chip making is one of them. And there's a lot of ways in which they can try and skirt those export controls. Developing a tight enough net around it is a very challenging maneuver, especially given how ambitious these export controls are.
And it looks like it is going to be a rematch between President Biden and the former President Donald Trump. How should China be looking at this election, Jennifer?
I mean, I think from Beijing's perspective, really, regardless of who wins, they're expecting the United States to continue to take a pretty tough approach to China. And we heard this from Wang during his press conference this week in Beijing, where he was talking about the fact that the United States, despite some of the progress that's been made from his perspective in stabilizing the relationship with Presidents Biden and Xi meeting in San Francisco, the United States continues to take steps to limit China's access to technology. From Beijing's perspective, try and contain China's China's rise, referring there most likely to recent U.S. steps to limit China's access to bulk sensitive data and launch an investigation into China-made connected vehicles. At the same time, the U.S. Congress is considering bans on TikTok and on Chinese biotech firms. So I think what that demonstrates is, even though a lot of the talk over the last few months has been about stabilizing and improving the relationship, the arc of that relationship remains very much a competitive one.
Jennifer Welch, great stuff. Thanks for staying up with us. Our Bloomberg Economics Jennifer Welch there joining us out of D.C. as we count down to President Biden's State of the Union address. Take a look at when it comes to A50 futures. We're still in positive territory here this morning. HSI, we're watching very closely this pre-market. We're up about 1/3%. CGBs continue to rally, 720 for dollar China. Plenty more ahead. This is Bloomberg. Some big stories we're tracking for you today. The Hong Kong government has published a draft of a new security law to be formally introduced to the city's legislature on Friday morning. The fast-track process follows a month-long public consultation. The draft law, known as Article 23, proposes maximum life prison terms for treason and insurrection, but also introduces a defense of public interest. Hong Kong Chief Executive John Lee says it must be passed as soon as possible. The U.S. Congress to moving closer to forcing TikTok's Chinese parent ByteDance to sell the social media platform over national security concerns. The House Energy and Commerce Committee voted unanimously to advance a bill blocking app stores and internet service providers from offering TikTok. The company is calling on U.S. users to protest directly to their lawmakers. President Biden plans to direct the U.S. military to establish a temporary port on the Gaza coast to ramp up the delivery of aid and ease the humanitarian crisis in the territory. Senior administration officials say the president will announce the steps in his State of the Union address in a few hours. And we're told the port will take weeks to build and involve U.S. military personnel on ships offshore, but not on the ground in Gaza. All right, take a look at what stocks to watch here at the open. A50 futures are looking pretty positive here right now. SMIC, that's one to watch here on our Bloomberg Scoop, that this chip breakthrough and the chip that was used from SMIC did get tech from two U.S. gear suppliers. The stock is up about 1% here this morning, and we're watching very closely some of these crane makers as well. There's been an espionage probe that finds communications device on some of these cargo cranes, according to the Journal. And we're watching healthcare stocks, just given what we've been seeing. The fears about this biotech bill being passed, or at least advancing within the Senate committee there. We are seeing them recovering from them being hit just this week as well. Interesting, China Galaxy also cutting its recommendation on WuXi Biologics to hold from an ad on the back of those concerns. But right now we're seeing a bit of recovery there. Hang Seng also recovering as well. We're up about 1/3%. HS Tech is flat right now. Our special coverage now of President Biden's State of the Union address starts in a moment.